Cryptocurrency markets are historically volatile. These are speculative investments that carry a high degree of risk. Now, you may have heard of the huge price rises in Bitcoin, Ethereum, Litecoin, and other altcoins in the last year. In fact, it was common to have price moves of 1,000%, 2,000%, even 10,000% in some cases. However, new investors don't consider that what goes up also comes down just as volatile. For instance, in 2017, Bitcoin rallied 1,400%, but during that time, there were 7 price drops of 20% or more. And so a new investor that moves into the space makes a common mistake of position sizing too big without considering how volatile this asset is. So let's give you a quick rundown of how to think about trading in a volatile market. Now, the indicator I like to use is called the average true range, or ATR. And what this is basically just an average of how much the price has moved over a specified period of time. If you think about ATR, you can use it as a risk framework for where to set your buy orders and your sell orders and also your buy stops. So let's take a look at a chart right now and show you how this works. So what we're looking at right here is a chart of Bitcoin versus the US dollar. These are 240-minute candles, which represents 4 hours of time. This is on the Coinbase exchange. Now, the first thing you'll notice is that the top chart looks just the same as every chart we've looked at so far. Now, below it is a chart of the average true range. And this average true range gives us the range in volatility of the past 14 time periods. So you can apply this 14 time periods to days if you're looking at a daily chart, or for here, these will be the last 14 4-hour periods. Now, average true range is not a static indicator. You can see how it moves up and down, especially when the market's really volatile. So with this sell-off in Bitcoin, we saw the average true range rise to about $700. When the Bitcoin markets are less volatile, the average true range sinks between 300 and 400. Now, these numbers are important because they'll give you an indication of how much volatility you can expect in the price of Bitcoin over a given period of time. So if you were to buy Bitcoin at, let's say, 6,000 here, the average candle, you should expect a 700-point move. So if you're buying something at 6,000, then you should expect that this could potentially drop to 5,300 in the next 4 hours. And so when you're setting stops or putting buy orders in or sell orders, you have to be aware of how volatile the asset is, and the average true range gives you this framework. So in further lessons, we'll show you how to set stops and sell orders using this average true range framework.